We are reviewing currently Kenya Pipeline Company's tariff application for a 3-year tariff control period, which will be beginning at the 15th of October this year for a 3-year tariff control period. We are mandated as a regulator as per the Energy Act Section 11B to moderate and to approve any network service contracts, any tariff applications from any utility. This is both on the electricity side and more specifically for this case on the petroleum subsector side. Kenya Pipeline has had a 3-year tariff review which has been applicable for the last 3 years, from 2019 to this year. We are seeking to get the views of industry stakeholders and the public as we go into the process of reviewing KPC's tariff application, which we did receive in July this year. One of the notable changes is we're looking to unbundle KPC's tariff. Historically, we had one tariff both for pipeline transportation and storage. We're looking to unbundle those so that then we have a separate tariff for pipeline transport and a separate tariff for storage. What is important is for us to be able to moderate as per our mandate to balance the interest of investors and consumers. We do know that one of the big topical issues is the petroleum pump price, and the transportation component is one of the line items in the price build-up that Kenyans will pay for at the pump. So we're really looking at how do we then balance the interest of ensuring that we have a pipeline that is technically sound, that is maintained to standard, so that then we don't have any technical challenges when it comes to operation. We also look at the investment that KPC seeks to make in the 3-year tariff control period. What are the operational and maintenance costs? And we balance those others against the interest of the consumer to ensure we have a pump price that is affordable to consumers. So really it's a balance between the investments that will allow us, the regulator, for KPC to be able to make, and balance that as and against the interest of the consumers. So from a technical standpoint, we'll be able to look at these investments and see whether they're actually necessary. We look at their cost of capital, the debt equity structure, what are the operational expenses, what do we allow as allowable investment, which then becomes part of the regulated asset base. So we are not at this juncture being able to say as to whether the impact on the tariff as per KPC's application, as we determine as a regulator, whether that will have a positive or negative impact on the ultimate tariff. But this will be based on our analysis as a regulator as to what would be allowable into the regulated asset base, how we look at their cost of financing, their debt equity structure, which will then determine where we then land as the regulator when we make our decision. So what you've seen now on the increase, the 54 cents that KPC has proposed, is a proposal. We'll then need to break that down and look at what are the investments that they intend to make. Are they necessary? Just highlighted one of the areas, which is the replacement of line 1, which we feel as a regulator is probably necessary to ensure that the country has security of supply. Because as I said, one of the big issues here is to balance the interests of consumers and them as an investor, because this is a backbone critical to our economy. So we don't want to see pipeline leakages as a result of not being having the funds to be able to maintain the KPC network. We want to see some increase in storage capacity, so then we have adequate cover in terms of stock base of petroleum products in the country, because we may have a bigger economic impact should we not have sufficient storage, or do we have a pipeline that is not maintained up to standard.